Yeah, back at you in black. Yes. Our future's so bright, we gotta wear shades, cranky ones at that. You guessed it right. My skateboard's right here alongside me. I am the Benjamin Button of the crypto world, getting younger with every day. Here's what I gotta tell you. A couple of comments that came out from folk who not understanding one single element about what I do in essence, and we will be wrong as always, but what we are doing on the Crypto Sniper is broadly, in a simple sentence, technical analysis, largely on Bitcoin, but the crypto world generally, the majors, but most of the time spent on what we call the God market, Bitcoin, because Bitcoin has been leading contractions and expansions in the crypto realm. Also, comparative technical analysis between Bitcoin and the core major alts, all technical analysis. This means charts, this means patterns, this means relative strength, this means occasionally volume by price, but it is all technical. This is the realm of technical. And I tend to get these kind of responses back. He doesn't know what he's talking about. Bitcoin has got a halvening coming along, and every time Bitcoin's had a halvening, it's mooned 10x just prior or just during, etc., etc., etc. Or what if when Craig White does this and sells X million of his Bitcoin and that happens? Or what about, something about mining X, Y, and Z, the miners doing this? Or what about when the SEC bans that or approves this? And all, essentially, particularly the Bitcoin halvening one. In fact, you can't be watching crypto and be in the crypto world without have had an article put in front of you. You can't be on TradingView and not had the side articles and some sense of curiosity and seen that. And occasionally I will discuss what are called fundamental topics. The people that also claim to be technical advisors, taking money off people technically, will often agree with these people saying, yeah, he doesn't talk about halvening or whatever the case may be in his analysis. It's simply this, and this is what people need to grasp. Technical analysis is price charting work. And the assumption of technical analysis is the following. All fundamental information, news, narrative, halvening, SEC, government, this big whale, that big whale does this exchange adding a coin, this one removing a coin, all fundamental aspects that are broadly known, and some that might be known just to small parties, usually big hitters, whales, institutions, players that have a significant role in the crypto market, will be reflected in the chart as a price discounting mechanism. So there are guys with news channels that will go into great length in terms of giving me rhyme and verse on the sprinklers just started up there. I thought, who's having a swaz in my back garden? I'm gonna have to break somebody's leg, only to find out the sprinklers are on early. It's a discounting mechanism of all known fundamental news. So we can chat, but I think there's other people that do this far better than me on every news event, every narrative. To me, honestly, when it comes to the barefaced elements of making money in the market, that is more Hello Magazine than Financial Times. It's the gossip, it's the news, it's why something might happen. When you've been long in the markets as long as me, you become less fascinated in why something is happening and trying to get ahead of the curve and making money on a price move. You'll get the story afterwards. You rarely get the story before. For those that said, he never mentioned Bitcoin halvening, how could it possibly sell off that grind line and go down? Take a look at Litecoin. I was fully aware Litecoin was having a halvening. It had one of the best alt moves. It's a price discounting mechanism. It's usually done quite early. They say in the financial markets, you're typically 6 months before major strength elements are discounted, and likewise many things that will have a bearish adverse effect start to get discounted 6 months before. How much of Bitcoin's run from a low of 3,200 by over $10,000 to 13,900? Did the people that said halving ever wonder how many people saw Litecoin's move that started before Bitcoin as an alt, that ran one of the better alts in this rally, probably apart from BNB? How much of that move from 3.2 to 13.9 had people thinking, you know what, I'm going to sit tight for the halvening and I'm going to get in early? You don't know. You don't know. It could have been behind 100% of the move. It could be 5% of the move. And you know what? I'm not even going to waste my time guessing. The price and technical analysis bakes into the chart the aggregated voting machine of all participants. So if you're a technical trader and claim to be a technical trader and are taking money for technical opinions, don't agree with someone as being incorrect for not addressing a fundamental point if his point is a technical one. Because there's two ways you look at a market. It's two sides of the same coin. You look at it entirely technically and say, I will see the price move coming technically before I'm going to be that guy who gets the news. Or you think you can better work out the news and be able to act before the technical guy, or you're very well connected and what you hear is never shit or ramps or pumps, and you can act on news. What you don't do when you have a tumor is set out to cure it homeopathically with lotions, potions, chilling out, dietary changes, and only do half that solution and do half a surgical solution. You either go the surgery, you intervene, you cut your body open, and you cut that tumor out. And that's the traditional medicine approach. Or you recognize there may be symptoms that generated that tumor. You decide to go homeopathically. You try to shrink it back down. You do a little bit of ultrasound, oceans, motions, potions, and diet. You don't half do the one and half the other, because the tumor stays. You've got an open wound, but you never finish taking it out, and you're rubbing potion into an open wound. That is a dog's breakfast of an approach. You've got to understand this, and the crypto people generally don't. If you want to have a fundamental discussion, let's talk fundamentally. I would argue I'm not even the best guy to do that. I'm known probably more than I let on, but I don't get into the narratives. I'm certainly no programmer. I can't get into the details of how the blockchain functions. I think very few people accurately. I've read the white papers of many of the better known coins. I've looked at the understanding. I understand things like hash rate. I understand what miners' role and all of that. Am I going to be a leading edge for you on the fundamental? I recognize straight away, even with decent knowledge, there's not a hope. Am I sitting with Bitmain and having lunch with them every quarter? Am I talking to the key tech innovators in terms of what's the new thing every quarter, even though that's often going to be wrong? Not because they're trying to mislead me, but things are new all the time and bomb and fizzle. No, I'm interested in the game of making money in an underlying market, and I recognize that the best participants will vote with their money, and the biggest votes count more because it's smarter money, it's better informed money. That doesn't mean everybody who's got a ton of cash is always accurate. A lot of them get lucky and they make a ton of cash and they give it back pretty quickly. So judging on your form, you'll continue to manifest well, or you won't. But the key point is there's always people. It's like a premier division changing positions all the time. And if you keep making bad decisions, you cease to become big money. You get aggregated down. And if you look after your coin and you trade technically and smart, which I think is the best way, and a pattern methodology based approach, you will grow. And actually your footsteps become more significant. But we're all still ants in a big ocean that is actually, as an ocean, more of a little sea relative to an even bigger ocean that is the fiat bubble. So I'm not trying to diminish you or myself, but I'm recognizing there's a whole bunch of other participants, and I'm interested in modeling what they see and do. And if I see continual buying just below 10K, because everybody reckons it's the last time it's going to 10K, in the same way I've seen people say it was the last time Litecoin will trade $100 when it was having its halvening. Guess what? You get that run up and it's halvening and everyone buying Litecoin and it's the best thing under the sun. And then you get it coming back down, trading in the 60s. The people that said never weren't right. But people like to talk absolutist. And the more they talk absolutist, the more I think they're likely to be wrong soon. And it happens all the time. And I try to avoid being absolute about anything. Anything can and probably will occur. But I am interested in the probabilities of certain events. In terms of the grind buying that was at the 10K, that every time it dipped below got bought back, that did get given up. That doesn't mean it's going down to 7K. It may get a fractal target, just sub 8.8 for us, and then have some coming in strength. It may actually get supported at the lows of the previous lows at $9,049 and build a base there again. Quite a few things will happen. But when everyone was overtly saying, you know, buy the damn dip sub 10K, well, I'm afraid it's dipped a bunch lower, and it's dropped $500, and now it's bouncing between 9.5 and 9.7. So short term, that might not be good advice. In the long term, buying Bitcoin at any price might be good advice, but buying it lower down is even better advice. You know, so buying sub 10 at 10,990s. When it's 30,000 will look like good advice. But if you had an opportunity to get it at 8.8, sub 8.8, if you had an opportunity to get it sub 7K, which is a possibility, not a guarantee, is also good advice. And I think all of those remain open. But it also could move up, and we will adjust our views and we'll change and we'll flip. But right now I'm short. I'm still short and I'm in the money. But I could be out of the money on a spike, and I know what levels I don't want to see run, and I have those stops, and I will actually lock in profit. So regardless, if I turn out long-term right, I will have a profit on this trade despite a spike when silver and gold were absolutely hammering it out and Bitcoin got a bit of a bid, calling short prior. Despite that spike and having to, out of safety for managing against losses, closing some of it and eating some red. It's now that red's gone and it's green. So the bias was accurate for that time frame under review. And it's a discounting mechanism. Don't post in the comments, but the halvening. Post it on Omar's channel. He's a great guy to follow for the story. I bet you would have mentioned it umpteen times. I know of it and have watched it. I don't over mention it. Sometimes I just say, maybe this will go down because X, Y, and Z. That's just fun and speculating and the need to tie a narrative. I don't overly feel that, and I often don't at all. But understand that the story is often irrelevant. Sometimes people fit a story that isn't even the true facts for why something happens. I call this toe tagging. In fact, I'm going to name this YouTube, because I haven't decided what to name it. I'm just recording it and just consciousness is streaming. The understanding of toe tagging. You see, you have a dead body that gets picked up on the pavement. It's a problem. You take it to the morgue. The city's got duties to do. There's next of kin that need informing. You don't know his name. He's buck naked. He looks like a vagrant. No ID book or passport. No bank card that says Joe Schmo on it. You've got a problem. You find out the name because you talk to your vagrant friends that are, the cops all have, that are half an eye watching the streets, informants for who's a drug dealer and who isn't. Never get into drug dealing, by the way. The CIA hate the competition. It's just a bad idea. I digress. Anyway, Vagrant B says, hey, this is Vagrant A. His name was Joe Schmo. And I heard he had a sister in some state in Nebraska, and she checks in on him every time. This is a number, whatever. And he was at that soup kitchen once a week, and they all know him as Joe the Schmo. And it's all good. You can put the toe tag on Joe Schmo's toe. You can contact his sister in Nebraska and check in with a soup kitchen, and you now have a reason. His name was Joe Schmo. Alcohol poisoning, knocked his head too hard, had a stroke in his half passed out stupor. That's what happened. The story is now complete. That's what happened. We can all move on now. The body gets buried. Dear Joe Schmo lived a successful life until he turned to alcohol and trading against the crypto sniper. Broke his balls not listening to him. Lost all his money. Kept mentioning fundamental shit when the guy's a technical charting channel, and turned to drink and drugs and cracked the back of his skull open, and is now dead. There's the whole story, buried. Put him in the ground, and you can move on. That's a toe tagging principle. Now, in small events, when a market suddenly takes a dump through a level and is no longer hanging on the 10K level but is hanging sub the 10K level by a few $100s, people need to explain that. They feel the need to explain it. Sometimes there's just a dead body, and your explanation, they just will seize any narrative and put any shit on his toe. And they'll make up a name. It was Mickey Mouse, and Mickey Mouse slipped on an ice cube. Now it's all explained. The mainstream media do this all the time. I watch technical patterns. We called oil to fall from 115 and to have it mega overperformance to the downside in July 2014. The crap they were coming up with, we called this months before it happened, because we were in a macro, I'm a technical macro chartist. Long before, we say it's very high probability that the following event is going to occur. And it's going to be the first setup in a new trend. It's going to overperform to an immense degree. It's going to go well below 60, our target, and continue down for a while after that. We can't say how far. But we'll be able to trade it because we know how to do our overperformance bands. We'll take some off at our target. That was my story. I see in CNBC, and this hedge fund, the first to call the oil short at $93. I'm like, shit, man, you guys were late. We had the Euro Swiss franc in 2009. Technically, a macro short for us. It was clear the central bank was already intervening, hanging on the 1.5 level. We called a major sell-off in it. This is pre the pigs, pre-Greece crisis, pre anyone ever knowing anything to do with that. This is what proper quality, big time frame, technical analysis can do. I didn't listen to narratives, and I didn't care for reasons. Put the trade on, they'll come to you with a story afterwards. You'll realize what you traded later. If you're a technical person and you're taking money for people to talk technical consults or do technical business, understand that you're doing a technical assessment and you are a technician. That means all fundamental information is deemed baked into the price. In the same way, when they stamp the one side of that coin with the queen bitch granny's face, you get a crest on the other one. You can't talk about the face when you're looking at the crest, but they are part of the same synonymous whole. Do fundamental analysis, good luck. To me, most of you have no edge. Let me give you bad news. You think you know a guy who's got quite a lot of Bitcoin, and he knows a guy who's got even more Bitcoin, and you think you're going to be one of the guys to hear. Let me tell you, I've worked next to hedge fund managers, ex-guys with Goldman Sachs, Merrill Lynch, Bank of America, head traders in a equity trading environment who traded off news, who were swinging massive lines on equities and credits, regularly getting faked out on stories that didn't happen, that might have happened, and sometimes being accurate. They had a low rate of accuracy, but they only had to get a few right on what things were doing. And I'm hearing this, and I'm hearing this. And they were all trading of what they thought they knew. And they said it was tough. You as Joe Schmo, no, not the dead Joe Schmo. Let's give you a different name. As oh dear, I'm going to run into trouble. I won't give you a name. Francis and his crypto followers, YouTube tribe followers. You don't have an edge on fundamentals. In fact, most people who think they're trading technically don't have an edge. I was looking at some technical program that a guy was doing just to see what other people are doing out there. He was doing free content. Untradable for being successfully sustainable. And he was well presented, well liked, highly followed, not mentioning names. Untradable. Untradable. Support and resistance as a concept is crap for trading. It's significant technically, but the concept of bumping through and being able to short, where's your stop placement? You're trading a double top. All of this, I've tried and I've done this all before. Not that to say I'm the master executioner of it. I'm talking about a real, sustainable, consistent edge. One day it'll bump and look like and feign back in and look like it's respecting the double top, and then it'll pump through a level. The next day it'll be the top and it'll turn down and it'll trade through. The risk rewards guys are getting, ones and maybe twos, awful. The amount of times they're being accurate doing that, awful. Slow road to the poor house, it's like a negative. Be careful what you flipping compound. One of my favorite pictures is 1.1 compounded 365 days, or 1.01. No, let me just say this, 1.01, aka 1% in a day, compounded 365 times to the power of 365, and then 9.99 compounded 365. And it's little mathematical calculation. And the difference is so stark, it's astonishing. The mathematics of your trade does not make sense. You are compounding a minor negative edge, assuming you continually execute well, and you regularly don't. Even on our great system, we regularly don't execute well. You don't have, you're forgetting to put orders in, or you get a bit slippage and all little things. You don't have sufficient edge to be active traders in this game. Some of the best things most people can do is commit to no more than 4 to 6 major decisions on key trends. We look to get 4 to 6 on, say, Bitcoin, major decisions right on significant key big time frame moves for Bitcoin. If you do those with your investment pot, and you should have 2 pots, investment pot, trading pot. Investment pot, unleveraged. Trading pot, you juice it a bit, but not too much. If you get those 4 to 6 decisions in an entire year for Bitcoin accurate, the thing about putting things to the power of is it makes a huge difference. You only actually have to have made 4 decisions. If we're wrong and we don't see sub 8.8, that's fine. We know where our stop is, and I'm going to lock in a profit. We have the level. In spite of eating a bit of red on the spike and reducing size into that spike and then adding it back in later when it fizzles. You've got to be so careful about what you compound. You get those 4 decisions right, and let's say you're only making 10%. And by the way, the difference between buying Bitcoin at 9,999 and buying it at 6,999 in terms of how much Bitcoin and compounded 4 times is huge for what you have. And let's say you get 3 of those decisions accurate. In other words, these are your highest probability where you say, I'm doing this. Otherwise, I'm either fully invested. We're in a macro bull. That's the other thing that came out of my crypto tube. Why is it going down? This is a bull market. It is a bull market. We've called it a bull market on previous videos. Since the 3-2 reversal, it's a bull market. And let me just say, it is absolutely a bull market. But here's the assumption that goes with it, that all these guys do. Is they think everything is exactly as the last time. The Mark Twain quote is, it rhymes. It's not identical. Let me tell you what's happening in my view, as always, potentially wrong, is as markets mature, they behave less like crypto kids are running them. In other words, instead of exponential basing out move, gaining momentum trending, exponential blow off, vicious back smash, which regularly sees 50, 60, 70% retrace, period of basing out, marginally lower lows, new basing, beginning of slight trending, exponential move again that clears the previous high, rinse and repeat infinitum. It's not always going to do that. It's not always going to do that. We're coming to a point where we're going to have a major financial system reset. This is the value about the fact that we look at all markets, not just the crypto market. And it ain't ready quite yet. If you want me to guess, I'll give you my best probability guess, but it's a fine probability. It's easily wrong 6 months before, a year earlier, a year after. 2021 will be 2007. 2022 is the whole 2008 bedpan crapping event. And they're going to get Trump in for a second term in my take. And they're going to crash it on the conservative. In other words, I see hands in this. I'm conspiratorial by nature. If many people will not interview me, not record because they think I don't need that baloney. Well, then you don't understand that things aren't random, that the same people keep showing up, keep getting bailed out. If you're not conspiratorial, you're ignorant, in my view. That doesn't mean everything is a conspiracy. I laugh sometimes at the people say, oh yeah, they attacked Bitcoin, they had to do it the Sunday evening, whenever, whatever, whenever. Especially when technically I've seen it coming. So I'm not an everything conspiracy guy, but there's a major reset. When you get a major reset, you're going to, in all likelihood, have an extreme pump. An extreme pump in percentage, but even more so in dollar terms. In dollar terms. It might equate to the percentages of the early mega moves, but in dollar terms it's going to be even larger. And it could even exceed in percentage terms. So the fact that you don't make a higher high in this current bull market and that you pause is extremely bullish because it points to continuation pattern. It's extremely bullish because if you get that mofo of a monthly Bitcoin continuation pattern that I think is currently my best probability of many, and I have many, and if you're not premium, you're not getting to see them all. I'm sorry, I don't have time to talk my entire book to everybody who's not respecting me with money, and that's your energy and my energy, and you wouldn't appreciate it anyway if it's free view. So the people that do, and the people that don't. But if you get, I actually give an immense amount, if you get what I'm discussing, you will have a breakout in aggregate. I won't say in percentage terms, although I suspect as well. In aggregate, dollar-based terms will be extremely vast. Extremely. Just the target amplitude from 20K down to 3K is already $17,000 moves, and this would be the first of its kind, and you'd have extreme overperformance to it. Much like we have on the USD Korean won in the 96 Asian crisis, and much like I'm expecting we will have coming soon. Yes, with this whole China. China's going to do major currency devaluation. Korea will do major currency devaluation, and the yen and the dollar will be the strongest. There'll be a certain dollar milkshake effect, and then that will end for a while. And then you want to have plenty of precious metals, and you will want to have plenty of Bitcoin. And it's extremely bullish not to have made a higher high. And people will sit there saying, you don't understand Bitcoin. Bitcoin does up like this, down like that, basing, a trend line is broken, it makes a new high, it comes back down, it bases out, it makes a new high, and this is a bit like someone who listens to music and the song is da 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 da, repeat infinitum. It does until it doesn't. And the actual fact that it is doing a high point at 13,000, that is the 61.8% of the Fibonacci, and it continues to be rejected there, and it was supporting, and it's currently supporting at the 38.2% level, and has been bouncing between those levels and has leaden feet and is sitting at that 38.2%, tells me that your bullish scenario that you're going from here through the next high as repeat ad infinitum as it's always done before is probably quite incorrect, and you're about to be caught because somebody taught you the two-step, and now every time you dance, the only thing you do and the only thing you expect is a two-step. And that's technical naivety. As markets mature, and when you have super cycles and super events, we essentially have a little ball with a small umbilical cord that attached to a huge globe. Think of something as big as Jupiter. And you think of this as a basketball in the corner of your room. And it's got a little umbilical cord. They almost trade in their own realms, but there's a small amount of flow that goes in between them. One's called cryptocurrencies and is losing right now market cap value. The other one is planet Jupiter and is the debt quadrillion Ponzi scheme super end of cycle that has never existed in an entirety of an entire planet before. In other words, the Great Depression of the 30s, boo, that was America. Yeah, it wasn't great for other countries around. China wasn't even plugged into that. Japan wasn't plugged into that. Africa, what did they know about the Great Depression? India? South America? Downturn maybe? We are talking about a synchronized monumental collapse. A black hole in Jupiter that might have to ram down that umbilical cord into that basketball in the corner of your room and accommodate all the people. I could be the biggest bull by calling Bitcoin through the 10K level to trade on the 9.5 level. Oh yes, let's deal with a few other things. Your alt market that you love. I've said countless times on Bitcoin dominance, the Bitcoin dominance has been since 2018, the beginning, aka the bear market. The Bitcoin dominance has been strong. Your alts are shit. Hear me now, all shit. You'll say, but Binance Coin. Wait a while, give it a while. I had the same with the EOS guys. Give it a while. Litecoin. It's already turned, it's already selling off. Go and take yourself to total 2 on your trading view, which is the market cap, excluding Bitcoin. And all these guys that call bull market, what you should actually be doing is, yeah, BTC is a bull market and is the reason that the alts have not entirely died. Go have a look at that total 2 chart and tell me about that bounce. If you use TradingView charts and you run the high from the total 2 market cap, that's essentially December 17, to the low, that is 1 year later, approximately, you get those ice cream colors. They start with strawberry. Strawberry's in the basement and goes from 0 to 23.6.